Most traders don't lose because their analysis is wrong. They lose because they never act on it, or they act at the wrong time. Think about it. You can spend hours studying charts, marking zones, and running indicators. But when the candle forms and it's time to click buy or sell, your finger freezes. Or worse, it clicks out of fear, not strategy. That's the difference between market analysis and market execution. One makes you feel smart, the other decides whether you make money. Market analysis is the planning stage of trading. This is where we look at charts, study candlesticks, run our indicators, read the news, or even dig into fundamentals. It's like being a general before a battle, drawing out the strategies, imagining where the enemy might strike, and preparing your army. But here's the catch. Analysis is theory. It doesn't risk your money. That's why so many traders love it. You can spend hours analyzing without the market ever slapping you in the face. And the danger? Overanalysis. Some traders can't see the market anymore. Their charts look like an art exhibition, with more lines than a zebra crossing. They keep tweaking and redrawing until they paralyze themselves, never ready to take action. Analysis is important, no doubt. But remember this, analysis only tells you what could happen. Execution decides whether you capture what does happen. Market execution is where theory meets reality. This is the moment you actually hit buy or sell, put money on the line, and accept risk. Execution is not about drawing pretty charts. It's about courage, timing, and discipline. You can have the best analysis in the world, but if you can't execute with confidence and consistency, your knowledge is just a paperweight. Think of it this way. The market doesn't pay you for predictions. It doesn't reward you for being almost right. The market pays you only when you take action. And here's the truth. Execution is hard because it exposes you. Suddenly, it's not about lines and theories. It's about fear of losing, greed for more, or the temptation to revenge trade. Good execution requires rules. It means sticking to your stop loss, respecting your risk management, and pulling the trigger only when your plan says so, not your emotions. Execution is what separates the people who know the game from those who play the game. Now here's the tricky part. Most traders can analyze. Many can execute, but very few can do both in harmony. Why do they fail to bridge the gap? First, fear of loss. You might have done the perfect analysis, but when the moment comes, fear whispers, "What if I'm wrong?" That hesitation makes you miss the entry, and suddenly, the market runs away without you. Second, overconfidence. This is when traders fall in love with their analysis. They ignore signals, they double down, they keep holding because their perfect analysis says the market must turn around. Spoiler alert, the market doesn't care about your drawings. Third, emotional interference. Revenge trading after a loss. Greed is pushing you to over-leverage. Impatience is making you jump in too early. These emotions hijack execution, turning a solid plan into a disaster. The reality? Most traders don't fail because their analysis was bad. They fail because they couldn't execute with discipline when the pressure hit. So, how do you close the gap between analysis and execution? How do you make your trading brain and your trading finger work together? Here are the keys. 1. Simplify your rules. Keep your strategy clean and easy to follow. The more complicated your analysis, the harder it becomes to pull the trigger. Clarity builds confidence. 2. Predefine your risk. Before you enter a trade, know your stop loss, your take profit, and how much you're willing to lose. When the risk is already accepted, execution becomes mechanical instead of emotional. 3. Automate your discipline. Use alerts, pending orders, or trading journals. These tools reduce hesitation because the decision is made before the emotion shows up. 4. Accept imperfection. No analysis is 100% accurate. No execution is flawless. The goal is consistency, not perfection. Even professionals lose trades, but they win by sticking to their plan over the long run. Remember, trading isn't about predicting the market perfectly. It's about executing with discipline when your setup appears and managing risk when it doesn't work out. At the end of the day, the winners in trading aren't the best analysts. They're the best executors. Analysis gives you the map. Execution gets you to the destination. Without execution, analysis is just theory. Without analysis, execution is just gambling. So here's the challenge for you. Stop treating analysis as the finish line. Treat it as the starting point. Plan your trade, but more importantly, trade your plan. Because the market doesn't reward those who know the most. It rewards those who act with discipline when the moment comes.